Good morning, Harvey Jackson here. Just going to go through currency and how it could affect on trade. So first off, here we've got Vancouver port strike that is in play here, and as you can see here, 52% of all grain gets shipped through those ports, as according to the Grain Commission. And the sooner we can get a resolution, the better, as that's going to change how grain is going to be moved here for sure. Oil prices pulled back after the China stimulus kind of got faded. uh, and yeah, it's affecting a lot of the other products. Palm oil, same idea. It ended up with some strength, but the problem is uh, supplies there. As you can see, the Chinese yuan here, just on a very short term chart, it actually hit some highs and then pulled back. You see it in a little bit longer term here, so you can see where it is and when was the last time it was kind of at that value. Would be back in early, but they had some higher traded values, but their economy is in trouble here for sure, and that's what they're trying to do is stimulate to get out of that kind of a funk. Here's the Malaysian ringgit, and it's closer to the all-time high on the short term. It didn't pull back as much, and that actually supported some of the Malaysian palm oil. Here it is in longer term. The last time it was there was back in 21. Canadian dollar, we're trading above this value here now. It's actually putting us back into January values since we've seen there in March, and we're basically stuck in this wider range now that we broke out of this short-term range. So if we can trade up to the 76 versus the 72, we're right in the middle of the range and broke through this short-term kind of a support value there. So we could have some pressure on some of our commodities because of that. Euro, uh, if you draw back in some time here, it's actually getting pressured. This is all as a result of the U.S. dollar losing some uh, 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 values against all these other currencies here. India rupee, not the same kind of story. Still trying to break through, but it's not the same kind of timeline that we've seen before. Russian ruble, if we look farther back, it went from higher values than that. Brazilian real, uh, it's it's quite cheap, and that's putting us in favor, or the U.S. actually is gaining some favor on some of their values of grains. Oilseeds. Let's just have a quick look where the market was currently trading. When I took a snapshot here, canola is down 5, rapeseed down 3 to 4, soybean oil down 14 or 0.14 cents a pound. Palm oil traded up, crude oil is down, soybean is down 8 cents, and your wheats are down anywhere from 3 to 5, and the Canadian dollar up. So let's just look first to see where the canola is trading, and it's trading right at the 50-day moving average, and we have to hold that and stay above this trend line to have some support on canola. As of right now, I'm not too worried about that, but as palm oil has some strength, and soybean hasn't broke its trend line either. But just looking a little bit closer at it, you can see that we're trading right at that 50-day moving average. Here, what I did is actually just the move from its low back on the 15th, the percent move priced in U.S. dollars. So the U.S. dollars is up here, and the versus just canola. So we've actually seen a gain in how the product actually gets bought. It gets bought in U.S. dollars, and it actually had a bigger gain in the value in U.S. dollars than the Canadian values. Rapeseed trading above actually it's the 100-day moving average, and it's still trading above it. The next upside target would be here at your 38.2 retracement value. So and there's a fair bit of distance between this and that there for the trend line, so it's adding a little bit more support. Here's the valuations of the canola minus or the rapeseed price in Canadian dollars minus the canola. $118. It's pulled off of some of its highs earlier, but it's still way above this trend of going up since September of 23. Soybean oil, steeper curve here, and it is trading above your 100-day moving average as well. Upside target would be 44.61, and Palm oil, very steep curve, so it might be tough to hold on to this kind of a target, but the upside target would be up here at the full retracement. Soybeans, not as steep of a curve, and the upside would be up here at the 38.2 retracement value. So here's wheat, trading basically sideways and a couple trading days down here. Not the chart that I would like to see, but longer it holds here, the better. As long as it can hold this flat line here. The better for international buyers, but the support strike might have some effect on that. Here's your Kansas, same kind of idea, but it's actually trending a little bit lower. Chicago is probably still getting some support there, but it still needs to be, or that this is, sorry, that Matif wheat here. Uh, it's kind of consolidating here. So I did have this question asked, but November 5th is the next StatsCan report, so we don't get anything kind of finalizing what this crop year is until December 5th. That's all I have for you today.